when did this idea of over issuing paper money start? It didn't start, when Nixon defaulted on the gold standard, he wasn't the first, he was just the most famous, right? People have been defaulting on paper money probably for thousands of years.
And Nixon just made it official.
Yeah, so the issue is, if gold is money and it goes into a bank, the bankers issue 10x more paper than there is gold. You have inflation. Eventually, right, when the French tried to redeem their paper dollars for gold, the U.S. basically closed the gold window. We defaulted on that obligation, and we started a cycle of inflation from 1971 on that's been running 50 years.
The time is now. The time is now to opt out of the current system and get into Bitcoin. Don't miss your opportunity.
And there you have it from Michael Saylor, and he's talking about that the default of fiat currency has happened not only since back in 1971 when Richard Nixon pulled off the gold standard, and why that happened. This has happened time and time again. This has happened with every global dominant country that held the keys to the kingdom when it comes to the fiat on-ramps and the fiat rails. Own the money printer if you may. The default of this has happened time and time again. Is the U.S. about to default? Our guess is that the debt limit's going to get risen. The money printer will continue to go burr, but also hard assets like Bitcoin, real estate, and gold will continue to increase in price. And with that, I'm Sean with the Bitcoin Bros. You guys like this content, go ahead and smash the like button. Before we get started, go ahead and check us out at our Patreon, patreon.com/Bitcoin Bros. You can find it in the description below. Some major news: Coinbase CEO touts the UAE as forward-thinking amid the U.S. crypto crackdown. So with all the scrutiny that's going on, the CEO of Coinbase, Brian Armstrong, is again shilling crypto-friendly regulations abroad. Does this mean Coinbase is going to leave their operations here in the U.S.? And are they going to go internationally? Well, if the U.S. doesn't get with the program, talent is going to leave. An update from Bit Harrington. Imagine selling your precious Bitcoins 1 year before the fourth Bitcoin halving. Looking at the chart here, what do we see? He's calling out every time there's 1 year before the halving, what happens? The price appreciates. You see the price appreciates 2 blocks up right here at the halving. Then we go extremely parabolic. And if you just count the blocks, 1, 2, 3, 4, 5, 6, 7, 8 blocks to the top. And then second halving, and then we go almost 2 blocks up again. But then from the bottom to the top, how high do we go? 1, 2, 3, 4, 5, 6. So we went up 8, then 6. How high do we go here? If we go from the bottom to the top, we went 1, 2, 3, 4 blocks to the top. So you see there is a pattern here. You see it goes up 8 blocks, 6 blocks, and 4 blocks. So we're going to go up 2 blocks from where we are right now. So right here, 2 blocks to the upside. That's going to take us over that $100,000 threshold, between $100,000 and $200,000. We didn't make this up. It's all in the charts here. Are we going to see Bitcoin around 150K? For this next peak? That definitely could be in the cards for Bitcoin. And then an update from Stock Money Lizards. The path is clear. And what he's looking at here is the check and money flow below. Every time we come down and hit this 0.44 level, that is when the bottom formation starts. Every single time, bottom formation. Every single time, bottom formation. We come up, hit our head, have a rejection, and then an angle with 13%, putting in higher lows and higher highs. Make a new high, come back before we retest this, and then come back down before we make a new cycle. Hit our head, come back up, 13% to the upside, new high, rinse, repeat. So this continues to happen time and time again. As you see, this is going to probably come back up to the previous highs around the halving or after the halving, making that new high. How high are we going to go? This could potentially be the peak. This sort of goes hand in hand with what we just showed you with this chart here with Bit Harrington. Taking a look at the Bitcoin price chart at the current time of this recording, we're coming in at 27.6K. As you see, we're looking at the Gaussian channels, and right now we're at the top of this Gaussian channel. Why is this important? Because if you look, the halving is about 315-ish days away, and if we look at the previous halving, 315 days, we were almost in the same area. So if we zoom into this price action and see what happened in the weeks to come, this is where we were. And then over the next about a month and few days, we went parabolic. We went from below 10 all up to roughly about the 13.8K range. So Bitcoin over doubled. So zooming out in the price charts and zooming into where we are right now. So could we be seeing that over the next 2 months? Could Bitcoin be getting extremely parabolic from where we are right now? If we go out to here by, sometime in June, the Bitcoin price doubling up to 50%, up to 50,000 plus. Could that happen? It could be in the cards. We have to pay attention. We have to wait and see. And then taking a look at the DXY, what do we see? We see the DXY is getting ready to fall off a cliff. And this is going to be extremely bullish for Bitcoin and cryptocurrency because as you see, every time the DXY falls, this is when we have the Bitcoin and crypto rallies. Every single time. It's a 2017 run. This is the 2020, 2021 run. And right now, could this be that 2024 run with this downwards price action? You see the Gaussian channel is about to flip red. It's turning over as you see. The last time this turned over, what we do, we fell off a cliff. Taking a look at the Bitcoin dominance, as you see, the Bitcoin dominance has just flipped green on the Gaussian channel. That's on the weekly chart. So we could be seeing some more upwards momentum for the Bitcoin price chart as we literally just flipped positive a few weeks ago. So what happened last time we flipped positive? We actually came back down and retested that mid-range. Could Bitcoin come all the way down and retest the 42 level before having that bump and run to the upside? That definitely could happen if we have a rinse repeat. And coincidentally, look at this. This is in 2019, 4 years from where we are today. So we're going to see a cool off in the Bitcoin dominance and then an up run. That could be what we see for the rest of 2023. Look at the price cycle top indicator. What do we see and why do we care? The price action got it back above the orange. And this is definitely a bullish momentum. But look at the green line. The green line it has started to stabilize out and flatten out. The last time this happened, coincidentally, was in 2019. And then, from about a little over 2 years from that time frame, that's when we seen the new high. And Bitcoin, at the current time this recording, when this started to flatten out, the price was anywhere between 5,000, you can say 5 to 7,000, and then ultimately ended up going another 10x up to that 70K. So if we do another 10x from where we are right now, that'll take us up over $200,000. So there's a lot of room in the upside. The next 2 years for Bitcoin definitely seems extremely bullish. And let's hear from Jeff Booth. He's going to be talking about the global debt and what this looks like moving forward and what this looks like for Bitcoin. Let's hear from Jeff.
Call it $400 trillion of global debt. And if you paid back $1 trillion, dollar per second, it'd take you 32,000 odd years to pay back $1 trillion. So the debt is already insolvent. Right? And let's just stop there. And if anybody so there's no possible way that the debt can be repaid back.
That's mathematical.
Especially if technology is making things cheaper.
Right.
That would make the debt more expensive in real terms. As technology drives things cheaper, that would technically make the debt more expensive and harder to pay back.
Right.
So it explodes in real terms.
Yeah.
So that entire system that we live in and we measure not just social economic, we measure our lives in, our families, our everything, because we try to gain enough money to be able to live for our families, and we measure other people by it and everything. The entire thing is unrepayable.